How's everybody doing? It's Investing Club back with another video. In this video, I'm going to show you the simplest way to screen for high quality companies that you know will be around for years to come and are considered very safe investments. So as you all know, stock market has been getting hammered lately and virtually all stocks have taken a dive. And so this begs the question, if you have cash on the sideline, where should you be looking to put it? And my answer to that question would be you should be buying the highest quality companies you can find for a few reasons. First, high quality companies will always have a large moat or a sustainable competitive advantage, which will be used to ensure that the company will be around for many years to come. In addition, these high quality companies will have very manageable debt levels and will be able to navigate periods of uncertain earnings easier than other companies that have loaded up on debt recently. And I think it's important, especially now in this environment, to focus on companies that have very low levels of debt because as we all see, everything's shutting down and so many companies don't know how much money they're going to be making in the next few months or next year. Because of that, you want companies that have very low chance of going bankrupt because they keep their debt levels low. Now, the website I'm going to be using to screen for these high quality stocks is the Toolbox from Rulon.investing.com. They have a free 14-day trial, so everyone can do it. I highly recommend it. And this is the best website I've found for screening for these high quality companies. So let's talk a little about what constitutes a high quality company. As I said previously, the two most important qualities of a business are its moat or its competitive advantage, and then its management team. And I have a sample company up here. And what this website does is ranks different metrics that relate to these two qualities. And when you think of a moat that a business has, a competitive advantage is displayed by a company growing every year, growing earnings, growing sales, etc. If a company is doing that, then you know that it has a strong competitive advantage. In addition, you can take a look at a management team by looking at their return on equity, their return on investment, and their debt levels. And what this website does is takes these metrics for the moat, it takes its book value and dividend growth rate, earnings per share growth, cash flow growth, sales growth, and looks at them historically for companies and ranks them. In addition, the website looks at ROE, ROIC, and debt levels and makes them into a score for the management. So what we can do is filter for stocks with these high metrics to ensure that we're finding high quality companies. So we can go over to search and we can scan for stocks. So like we said, we want stocks with a strong moat, a strong management team, and it's predictable because like we said, a moat means that the company's fundamentals are growing, and the management score means that the company has manageable levels of debt, as well as the company is able to make high returns on its equity and invested capital. So we can set all of these for a number like 90 out of 100. And here you go. These are the stocks that come up. It gives you, there's 60 stocks here, and these are pretty much the highest quality companies you can find. And the reason I am so interested in these companies now is because historically, and especially in the last couple of years, these companies have been valued so highly that it was impossible for me to buy them just because of the valuations that were being placed on them. Because virtually all incredible companies, all investors know that they're incredible companies, and therefore they're likely to be valued at a premium. And what we've seen with this recent market sell-off is that every asset class is falling. Stocks have been falling, gold is falling, bonds have been falling lately, and even assets like Bitcoin have also been falling. And so when everything's selling off like this, what I want to do is go find these high quality companies. And when they're depressed like this is a very good time to buy because the excessive valuation that's usually placed on them is now gone for a lot of them. And some of them are even trading at discounted prices. And so you can play around with a lot of things in the screener. One downfall of the screener is it doesn't measure valuations. So you can't screen for stocks with a low price to book ratio or a low peg ratio. And for those, I like to use a website like Finviz, which is probably my favorite for screening those types of situations. But for purely high quality companies, this is the website I go to. And so I basically find all these stocks and then I'm just going to go through them and see if I understand the businesses, if I like how the business operates, and then I would get into reading their annual statements and listening to their earnings calls, and through that become more familiar. And then after that, if the business is trading at a attractive enough price, then I would start buying. Again, this website is called Rulon Toolbox. A lot of great things, a lot of great features on this website. They even give you gurus, which are basically some of the most successful investors in the world. And so you can look through all of these investors and see what stocks they're holding and see if you can get any ideas from them as well. So I hope everyone checks out this website to find some great high quality companies that they can invest in the coming weeks and months. And I will see you on the next video. Bye bye.